Hello, a very good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, the Chief Currency Analyst here at HYCM. Hey, I hope everybody is doing well. Very nice to have you on board. Now, welcome to HYCM's online trading workshop. I'm just going to briefly take you through the disclaimer. Remember that as we're talking about different entries, exits, currencies, different economic events, etc., this is not trading advice. The whole idea of this workshop is you look over my shoulder and you see the tools, the skills, and the analysis that I use in order to trade the financial markets, and that can help you improve you in your trading background and your trading decisions that you make. So that's just a little bit of insight in terms of what this is and what it isn't, just because some people do get confused from time to time. Now, looking at the online trading workshop, the first and the most important thing to always assess is to look to back the strong against the weak. Now, this is an analogy that I use often. In this illustration, if you haven't seen it before, you would expect the stronger arm to defeat the weaker arm. And exactly the same way in currencies, we're looking for the strong currency to defeat the weak currency. So in this workshop, we look to pair weakness with strength. That is the basis of our trading decision, our trading philosophy. That's the fundamentals of the market. So yeah, morning, Will. Good to have you. I'll get to the questions at the end. Don't forget there are questions and answers will be done at the end of the session. So any questions you've got, just pop them in the box. Good to see you, many of you. Yasser, good to see you again. Noura, glad you could make it. Lolu, great to have you. Aaron, good to have you back. Lakmai, Nalanka, good to have you on board. So don't forget, if it's your first time here, others, there is a question box, which you can just type your question in. We'll get to it at the end of the session. So looking at the currency charts, we're just going to go over now to them. You can see here, right? This is the dominant currency pair that we have for the day. It's the Euro-US dollar pair. Now, let me just run through this with you. You've seen some strong upside in Euro. The strong upside in the Euro was on these PMI readings that we had come out earlier this morning. I went long after the first one on the Euro. Now, this is the French PMI data. Now, with the PMI data out of Europe, they come in tranches. So you can see you had French, German, the Eurozone, 8:15, 8:30, and 9 o'clock GMT. So they come out in tranches. Now, Eurozone is comprised of 27 odd member states. It may have changed now, but it's roughly 27 member states. And you have Germany is the largest of them. France is also a fairly large player. So you tend to have French and German PMI coming out earlier than the main Eurozone. So where Germany goes, the rest of the Eurozone tends to follow. So traders and investors tend to trade that German data point and the French data point early as an indicator of what's happening for the whole zone. Now, just to put it in a bit of context, the ECB had been very bearish. They had increased asset purchases at their last rate meeting, and the outlook for the Eurozone is deflationary. There's rising COVID-19 cases, generally bleak. As a result of this generally bleak outlook, the market were expecting sort of quite weak PMI readings. They came in above expectations and above the maximum expectations. So that has been a good boost for the Eurozone. So we are expecting Euro-US dollar buyers on pullbacks. So any pullback back down to this 1.2180 region can be considered suitable for buying, and then looking at profit takers around that 1.2200 region. So around a sort of 20-30 point intraday potential trade is what I'm looking at here on the Euro-US dollar. And any moves back lower down can be considered suitable for buying. If you notice, dollar index dropping lower. Dollar index is inversely correlated to the Euro-US dollar. When the dollar index falls, when the dollar index falls, the Euro-US dollar rises. You can see how close that correlation is. So another potential trade would be just shorting the dollar index clean. So any retracement, that's that 90-40 region, you'd expect to find sellers on the dollar index. Now, in terms of economic data that's coming, there's a lot of economic data that's coming up later in the session. So a few key things to be looking out for. There's a Canadian CPI data, that's one to watch out for. The Bank of Canada, Governor Macklem, was out speaking quite bearishly about the Canadian dollar yesterday. He was saying how concerned he is about the Canadian dollar strength. That has seen some Canadian dollar downside today. So despite the upside we've been seeing in oil, you can see here, oil's been on a real strong rip higher. Despite that upside, the CAD is pressured. So just to be aware of that at the moment, that pressure that's taking place on the Canadian dollar as a result of Governor Macklem. So when the interest rate decision comes out later, I'll just go to Forex Factory and we'll have a look at the timings for everyone. When the Canadian data comes out, it's the next major data point. If it's a strong reading, if inflation is higher, that tends to make the currency appreciate. So if there is a higher than expected reading, the core one's the one to look out for. If the core CPI data is coming in, above expectations, beating the market's expectations, then that could be some strength in Canadian dollar. But don't forget, Governor Macklem is worried about Canadian dollar strength. So be careful of trading the CAD today. The best opportunity would be if this is a disappointment. So if CPI data misses, so say, 1.6% is expected on the common, it comes in at 1.4, say the median is expected at 1.9, say it comes in at 1.7, and there's a miss across the board, then that would open up CAD weakness, and that's a much easier trade today because that's in line with Governor Macklem's speech, and you can see here the CAD is weaker, so that's one to be looking out for. Then we have retail sales coming out of the US. So the thing to look out for the retail sales, US consumer makes up about 70% of the GDP of the US. So if that's a miss, it's not necessarily tradable, but it will put pressure on the Federal Reserve tonight when they meet to be more accommodating. It will also put pressure on the US administration to find some kind of fiscal stimulus bill that works before year end. So this could be a situation, if this is bad news, it could actually end up being good news. So if we see a miss, if we see retail sales missing, going into negative territory month on month, the core retail sales month on month heading deeper into negative territory, then we don't be surprised if we see the S&P 500 rising higher, because the logic will go, well, that means the Federal Reserve will have to do something to support the economy, or the US administration will have to agree a fiscal stimulus program. So that's one to be watching out for today. The main event of the week, the big event, everyone's been waiting for, is the last Federal Reserve interest rate meeting that takes place. That's taking place this evening at 7 o'clock UK time. Now, no changes are expected in terms of the interest rate decision. It's expected to be unchanged. However, and this is the key and interesting bit, the Federal Reserve are expected to have some kind of dovish twist. So the things to look out for, I've jotted them down for us here. Look out to see if they lengthen the maturities of the bonds, if they expand total purchases, take a screenshot of this, or if they list the outcomes they want to achieve before winding the program back. That should be enough of a situation to create easier financial conditions for the US, which would result in further dollar weakness. So we just need to watch out. See if we do see the Fed making a move here, and if we do see the Federal Reserve becoming more dovish, then this could be a great opportunity for gold buyers to step in. Now, let me just show you something. Gold, over the last 25 years, has gained, in 18 of those 25 years, it's gained between December the 24th and 19th of Feb. Why? It's the Chinese Lunar New Year. There's physical gold demand that happens at this time of year. So it's not a coincidence, it's not a fluke, it's a fundamental seasonal reason. As a result of that seasonal upside that we tend to see taking place in gold same time each year, if the Federal Reserve are easier, then that could be an excellent opportunity to go long gold. So definitely one I'm keeping a very, very careful eye on. Also, notice this. This is the gold ETF holdings. It's the exchange traded funds. Now, in the exchange traded funds, this tracks gold price very carefully. It also tends to trend. You can see how the ETFs trend. Going into the year, you can see how the ETFs, wow, they just have been gradually getting higher and higher, reaching record levels. They pulled back recently, and of course, if those of you who are astute, if you go sort of November the 9th, you can see here ETFs started selling off. That, of course, was the Pfizer and BioNTech vaccine news. So market participants just started selling off gold, precious metal on that Pfizer BioNTech vaccine news. You can see here, spot price low. So you can see the move lower here correlates very nicely to that move lower here in ETFs. And you see how the ETFs and the gold price tend to track each other pretty tight. Now, if we start seeing these ETFs pick up, notice they're starting to plateau. This is the latest data. This is from 16th of December. So it's always a day old. So this is ETF flows from yesterday, 15th. So this is as good as it gets in terms of up-to-date data. This is from the Bloomberg terminal. See, it's plateauing, right? That's a good sign. So this is what I wanted to see. I want to see ETFs plateauing. I can see that now. If we see a dovish Fed, that would be great. That's platinum, sorry. We have strong gold seasonals. If we see some kind of easier asset purchases, then that does open the upside for gold. Here we have two key areas. This trend line, a break and close above here opens up higher, or a break and close above here opens up higher. Also, going into the FOMC, I would be bullish on gold today, any retracement back down to that 1850. So any smarter move back down to there would consider that suitable for buying into the FOMC event. If you could try and get in and get your stops to break even, that would be ideal. It may not be possible now, obviously so close to price, but it's an idea that I'm considering. Not trading advice, but I'm just letting you know what I'm thinking about. Okay, so silver's obviously in a very interesting position. Similar outlook to gold. They tend to move in sympathy with each other. I'll just show you. This is the gold. See how gold tends to move? Gold and silver tend to move in tandem, okay? So one to be watching out for. Breaking through that key trend line, that's excellent. Technically, that's a good break. If that break holds, you would anticipate higher prices, and therefore, if we have a more dovish FOMC Fed, then any return back down to this level would be an ideal place to potentially go long on, one to keep an eye on. Also platinum. Now, this is a commodity I'm really interested in. I'm really interested in platinum for a few different reasons. Platinum is a metal that's not only a precious metal, it is, but it's also a metal that is used in industry. So if you notice around the 9th of November, if you see here that platinum was actually bought up on the Pfizer BioNTech vaccine week. Okay, now why? Because it's an industrial metal. And if the world gets going again, they're going to need platinum again. So platinum demand can rocket. And here you can see that platinum demand just starting to really take place. Now, a couple of things to note. If we get a bullish close on the weekly chart, this is a Harami inside bar setup. If this bar is inside that bar, a break of this level would be fantastic, potentially to move higher. Now, this is also a Harami inside bar pattern here. So if that breaks higher on a dovish FOMC, this 1050 region is a great support level. So one to bear in mind if we get a dovish FOMC. Now, looking at this from the monthly chart, you can see, look at that level. That is a key trend line that's broken through. Okay, so a break of that trend line does open up more upside. So this could be part of a decent run higher, you know, up towards 1200, 1300. So keep a close eye on platinum. I'll show you the seasonals for platinum. They are fantastic. Just take a look here. So this is buying platinum from the end of this week. If you bought platinum from the end of this week through to the 15th of Feb, over the course of the last 33 years, you would have profited in 27 of those years. 80% of your trades will be winners, and you would have a return of over 6% on average, and an annualized return of 45.36%. So in other words, that is the potential of making an annualized return that is over 45% in less than 2 months of the year, which is fantastic. So I'll just leave that up there for you. Obviously, seasonal patterns aren't guaranteed. You can see that they lost in 87, 90, 94, 95, 2000, 2014, but you can just see the gains that can be made. 2007, 2008, a 35% profit in 2007. So there are some extraordinary gains that can potentially be made. I was long platinum, and annoyingly, I saw this all very, very early, right back down here, and I entered long at the break of this trend line and took profit far, far too early. So I am currently long again platinum, but I'm long from, you know, 1000, 1020-ish. I don't know exactly where, but I'm trying to hold through all this and hold into February. Now, of course, this is not trading advice. I'm not offering trading advice, but the idea is you look over my shoulder and you can see the rationale. This seasonal demand is a lot based on industry. The supply issues are important for platinum at the moment. Let me just show you my blog. If you're not going to my blog regularly, can I encourage you to do so? I have some absolutely fantastic articles, even if I do say so myself. The reason I say that is because it's based on very good information. And you can see here that it was back in 24th of November where I was flagging platinum strength based on supply and demand issues. Okay, and you can see those very strong supply and demand issues. Essentially, there's not enough platinum in the world to meet demand this year or next. Have a look at that. It's based on a report from the World's Platinum Council. Do check that out, and you can see here this was published 24th of November. So if you went back down to the 24th of November, you know, you can just see that that was well in time for taking advantage of that. And the main time of the year is now coming up for platinum. So one to be looking out for, and again, all commodities will benefit from a weaker dollar: platinum, copper, silver, gold. So a big focus is on the Federal Reserve tonight. So that will be the big issue coming up. Okay, folks, I hope that's been helpful. I hope that's decent information for you. Don't forget question and answers. I'm going to go over to the first question here, which is from Will. Good morning, Will. Hope you're doing great. Yeah, I'm doing good. I took a short on the Kiwi. 30-minute divergence in anticipation of some reversion pullback in the dollar index after a recent move lower. Okay, fair enough. Fair enough. My thought process is if the Dixie pulls back, the beta should weaken. Yeah, which confluence with the price patterns I traded. Is this rationale for a short-term offer scalp for better value buying opportunities then, as long as the overall buyer is sensible? Like, well, if I'm honest, I would be looking, use your strategy when you get the divergence going the other way. That's what I would be tending to do. Because look, you can see here the pressure is dollar weakness. Now, yes, Will, you're right. markets don't move in a straight line, so you can trade that sort of bounce back. The problem I have with that is it's itty bitty trading, Will. You know what I mean? It's you're in, you're out, and or did I do the right thing? And then price can just move above you. So you know that the bias for the New Zealand US dollar should be to the upside. You're just taking that, you know, that little divergence. Like you could see here, look, there's a Harami inside bar. You could have traded that short and just, you know, trailed the stop. There's nothing wrong with it, Will. It comes down, you know, it comes down to you, who you are as a trader, and you finding your own identity as a trader. Now, I know that's an annoying question, an annoying way of answering it, but you need to find your mojo. And if it is mean reversions, that's absolutely fine. If you're finding you're getting a lot of those, Will, then just keep them up. The important thing for me, Will, here is that you recognize that the bias is upside. Now, some of the best traders, when you start reading, you know, you read books like Market Wizards. I'm reading like this book on memoirs of a market wizard by this guy called Vic. I can't remember his surname. But what I'm noticing is a lot of these guys, they understand their fundamentals and they know when to go a bit bigger. So, Will, what you've got to do is keep on the bike. What's encouraging me from what you're saying is you know that the upside bias is intact, right? So you get it. But you also know you might see a mean reversion because you've been around in the market enough to realize that. So that's 2 ticks. Now, if a total beginner said to me, I'm shorting here on a 30-minute divergence, I'd say, you know, why? Do it. But as you become more advanced, you know, that is okay to do that. It obviously is a higher risk trade. So you might, you know, if your trading is going good, you know, keep doing it. If you're finding that you're getting second thoughts and you just, you know, you're making about 4 pips here, 4 pips there, is it worth it? I'll leave it for you to decide. In my trading, what I'm finding, I've just got my year-end results and I've got 21% return for the year with about 4.5% drawdown. Now, most of my profits have come from a small handful of trades. So for me, the best thing that I can do in my trades is just, you know, finding those good opportunities and going in hard, you know, not over leveraging or anything, but just, you know, committing to them. So that's what I tend to do. I have itty bitty trades, and every now and then you see an opportunity and you go in for it when you just know that it's there. So that will come in time. That seems to be the path that people take. So, Will, that's a little bit around the houses. Yeah, still looking for the mojo, my secret sauce. Will, you know, the way it works is you just find it, Will. You just find it. And I know that's frustrating, but you know, you read some of these guys, trading guys, they were in it for a few years, you know, they did this for a few years, got mixed results, and they kind of find their thing, they find their sort of groove. And you will find it. It's just a question of not getting off the bike. What's telling me good news, Will, is you're understanding it. You know what I mean? You're understanding, yeah, the bias is New Zealand US dollar upside, New Zealand dollar pro-cyclical currency, we have equities up, we have commodities up, we have a weaker dollar. Should expect to find New Zealand US dollar buyers short-term, medium-term. So you've got that understanding. And then you've got a nice technical system that you're using. You know, I would say, Will, use your technical system to take your long Kiwi on the divergence. Maybe like, okay, here's a challenge for you. Go into the Euro US dollar pair, right? And start looking for some bullish divergences on the Euro US dollar. Look for that. And then if the Fed is dovish, then look for divergences in silver and gold. Like I entered platinum on a bullish daily divergence. So you can't see it here on the daily chart, but there's a hidden bullish divergence here on the RSIs. Great, it's forming. It was good enough for me to enter, and if it does form, then great, I'm in nice and early, and that should just rocket higher. Will, I hope that helps. Okay, I also promised to show folks the pin bar. Right, I'm going to show you the bullish pin bar. Now, yeah, great. Cheers, Will. It's good to see. You know, any questions? Just ping me a message. And don't forget, any questions, anytime you want to meet up or have a, bit more information on it, just any time you know how to get in touch with me one way or the other, either here at HYCM or just ping me a message on LinkedIn or Twitter, whatever. We can always hook up and chat through things. Let's have a look. Yeah, okay. Pin bar. Now I'm going to give you a few tips with the pin bar. Now this is like, okay, this is something that you can make some of these technicals your own. Okay, so a pin bar is a bar that has a tail, and a bullish pin bar is a pin bar that has a bullish close. So you want to trade these pin bars in line with the trend. So let's try and find a really good example of a bullish pin bar. So we're just looking here. Right. Okay, here's a good example of one, and it's probably even better because it didn't work out, but it's a good example of one. Just going to get rid of some of these lines. I'm starting to feel dizzy. Right, there we go. Right, okay. Now you see here, this is a bullish pin bar. Now a good bullish pin bar will have the following characteristics. It will have a bullish close. See, that's a bullish close. It will have a long tail. You want the tail to be about 2 or 3 times the size of the body. This is strong. It shows buyers have stepped in and they're trying to push the price higher. Okay, that's a good bullish pin bar. Now, one thing to look at the pin bar is you see, compare this pin bar with that pin bar. Do you see how this pin bar is bearish and the close is not inside the body of the previous candle? That is inferior technically to this pin bar. Now I know this pin bar worked out nicely, but that would be an inferior technical bullish pin bar because the close is not within the body of the previous candle. This is on the daily chart. You can see here, this technically is a superior pin bar. You can see it's from support. If we drew a support line in here, we'd see that that's a bullish pin bar from support, breaking some of those previous lows. So as people went in, sellers tried to join, they all got stopped out, and the buyers won the day. Technically speaking, that would be a lovely technical setup. Now, we don't use pin bars on their own. We don't go around just looking for, oh, that's a great pin bar here, isn't it? We're looking for fundamentals that confirm the bias of our trade. So here's an example of a nice bearish pin bar, okay? So this technically is a beautiful bar, okay? Let's just run through it. 1, the close is bearish. 2, it is within the body of the previous candle. 3, it has a large tail that rejects prices. You see, there's been no price here at all. And the fact that price sells back tells you that sellers, they don't want price to go up there. So technically, that is a lovely pin bar. You can see that its prices it's pushing away. You want to see space to the other side of the chart. That's the bottom line. Let's have another look at one from a weekly chart, see if we can find some good ones on the weekly. One moment, let me grab me. That's my cat just wanting to come up and help me. Right. Right, here's a technically, here's another fairly decent pin bar. Now that's not an ideal one, but you see the way it's become a bearish outside bar as well. It would have almost been a pin bar, bearish outside bar. Let's see if there's anything better on the monthly chart to really. There's a strange poverty of pin bars here at the moment. I just thought I'd flick on the major and a load will be there. Let's have a look at the pound. Okay, it's a bit better, right? So we can see a few decent pin bars here. So this pin bar here is a very nice pin bar. You see that it's broken out these inside bars. So 2 inside bars, there's been a breakout, and that's been a false break. and you can see that that's in line with the uptrend, a lovely upside potential. This is an inferior pin bar because the price is not within the previous day's bar. Okay, here's another nice pin bar. You can see that price is pushing away from prices, and yes, it's not within the body of the previous candle, but you can see how there's a lot of space to the left-hand side. When you get space, that's a really good sign. So here's another one in the pound, US pound, back within inside the mother bar candle, and just move into the overhead resistance. So what you want to do is use these pin bars with strong fundamentals. So let me give you I'll give you a market to look at. Let's look at gold, for instance, okay? So you know, we've been basically bullish gold pretty much all year, okay? So from this sort of a financial crisis, you could have been looking for pin bars in line with the trend. So just looking here, okay, there's a pin bar inside the candle. You might have taken that to the upside, back into that overhead resistance level. Here's another pin bar. You may or may not have taken it back up into the resistance level. There's another pin bar there, worked out nicely to the upside. That is that's a continuation pin bar, a bit of an odd one. It would be great to take, but it's a different kind of technical setup. And again, there's some other good technical setups there. But, you know, okay, there's another one here. Now that's not great because it's not bullish, but you might have taken that and been stopped out. You can see here with gold selling off, you might have taken this pin bar to the downside. Now, yeah, now one of those was on a FOMC decision. One of the, I think it was this pin bar, one of these pin bars here was on the FOMC trading decision. And we saw, yeah, it was here. I remember at the time I was bullish gold. I wanted to go long, okay, and that was it. I was bullish gold, wanting to go long. FOMC disappointed the market, and then the gold dollar was bought and gold sold off. That would have been a great example of a pin bar to take on a dovish FOMC. Now that was one of the examples because I had a bias to go long, and then all of a sudden the bias should have shifted. My mind didn't shift. So a good lesson for me, not to get overly committed one way on a market. So that was a good learning lesson for me, and took a loss on that gold trade. I made it up because I bought back down here, this 1850 region, but I also had to sit down through some drawdown. Pretty unpleasant for me, that, just bringing back memories. But you see, that's that's the way you want to use that pin bar. The key things is you want a long tail, rejecting price. You want to see fundamental reasons for the pin bar, and you want to see ideally the color. The candle wants to be the color of the direction you're hoping to go in. So, you know, if you're looking, let's see if it's better on the weekly. And these are great on weekly charts, daily charts, you know, anything like that are ideal. So technically, that is a very nice setup here. You've got a rejection of those higher prices, space on the left. The bar, although it's not bearish, it's pretty much, you know, it's pretty much right at the lows of the candlestick, so you know, not bad at all. But what you're looking at here is obviously the fundamentals would have been completely wrong. I mean, and that is, you know, that's in April when the world and his dog was bullish on gold. You know, there was no one, like, I mean, literally no one who was bearish on gold. In terms of, you know, serious investors, it's just the wrong time with so much QE going on. So you wouldn't have taken that trade. You just know not to have taken that. And you can see here how price consolidates, and then rips higher very nicely indeed. So yeah, just something. I hope some of that helps. Yes, yeah, where can you find the information about which currency is strongest and which is the weakest? What you want to do is you want to read some really up-to-date currency analysis. So a free version is on Forex Live. You can just go into Forex Live's website. You can go to follow the news wraps, and if you look on the news wraps, you often will see a good summary here. So you can see here Europe. So you can see, modest improvement in the French and German PMI prints. They held up rather well, and that's boosted the euro. So you can infer from this that the euro is higher, and obviously the US dollar is going to be weaker. So you can use these Forex Live market wraps. You can also go to, I'll send you a link to a resource. Just give me a second, Yasser. I have also a link. Let's have a look. Just going to find the link. I'm just going to send it to you one moment. I also work as a analyst for Financial Source, and that's one of the key things that we do. So just have a look. Just have a look there, Yasser, and contact me if you don't get any problem. Shwa, Brexit got deal or no deal? Yeah, great question. And no one knows at the moment, Shwa. The pound is appreciating because there's basically been some optimism that there is some kind of deal being reached. But whether it's there or not, we don't know. Pound's being bought as though it is. From Sunday, pound's been sort of finding buyers, but we'll have to see. Still unclear about what's exactly happening in the pound. For gold, is that bullish flag on the daily time frame? Let's have a look. Most probably. Let's have a look. Yeah, now let's. Basically, I'm not entirely sure exactly how to look at the bullish flag, but what I'd say is good enough for me is this trend line, Shwa. So if we get a bearish Fed, then expect this trend line to break. So basically, it's just simple break of that trend line, this at like 1860. So if the Fed all of us, if they start saying, we're going to expand asset purchases, they're more bearish, we're going to purchase more bonds at the longer end of the curve, etc., etc. And if all of a sudden you see the dollar selling off strongly, then just buying with a break of this daily trend line would make sense. But you have to get the dovish FOMC. There's no point buying now. There's no point trying to get in early. If you do, you're just taking a risk. And they might be dovish or they might not. They might say, which is, you could easily see the case, they say, well, we're not going to do anything now. We're going to wait for fiscal stimulus to come from the US administration. We don't want to do anything now, in which case you'd see, gold sell off and you'd have one of those pin bars that I've been mentioning most likely as price moves up, rejects that overhead resistance, dovish FOMC, and then you'd look at a price back down to that 1820 as a first port of call. So sure, I hope that helps. Folks, this is my last webinar of this year. I'm away on holiday and back again January the 5th. So I do wish you all a very, very happy new year. It's been a great trading year. Fantastic to have been with you. And I do look forward to, God willing, taking you through the next year as well. And it's been good to see a number of you grow in your analysis and your understanding of the financial markets. A lot of this just takes time. And a lot of traders, when you read through their history, it just takes time to understand the fundamentals, tie in with the technicals, and then find your mojo. But eventually it will come, and all the frustrations that you have, eventually they iron out, you see, and those, and you pick up all these little skills along the way that end up being very, very helpful. So it's worth the wait. Yeah, Shra, am I coming to Dubai? I hope so next year. If so, Shra, we'll meet up and it'd be great to meet you in person. So I do hope to be heading off to Dubai again next year. It'd be really good once we get the vaccine and everyone gets back to traveling. So hopefully, yeah. Okay, everyone, take care and have a very happy new year, a very Merry Christmas to you all, and look forward to seeing you God willing, in 2021. Thanks everyone now. Goodbye.